been so far for you guys?
Maybe I share first.
Yeah, sure.
Okay, so okay, we started this business back in November last year, right? And then from the start, business has been as usual, normal. And then ever since the circuit breaker started, we are experiencing an imbalance of supply and demand. What I mean by that is we compared to normal period, we receive a lot more queries from people who want to sell their insurance policies to us for various reasons, such as loss of job income, or if they got their pay cut, or they got into credit card debts, or they got into mortgage debts, or in serious case, divorce settlement. Yeah. And then on the other hand, we receive a lot less queries from buyers who are at least showing interest in buying resale policies from us. Yes. So as of this moment, we are currently looking more for buyers to buy from us in order to balance out the supply and demand that we have. Yeah, that's all I share.
Okay. How about you, Ethan? How's the story? How's the journey been so far? And what are some of the common pain points that your clients have?
Common pain points is the first thing is always they felt they have no one else to trust. Yeah, so I can say that trust in the financial professionals is still very low. But definitely it's improving as compared to 10 years ago. Yeah, so I'm always stuck in a situation whereby I cannot afford to offend financial advisors, but I also want to help clients. Yeah, so I just hope that everyone understands each other and everyone is doing their job only. So manage your expectations well and know what is in for everyone. Yeah. So that's one takeaway that I took when I started this business. Because I can feel the pain of financial advisors when it's something that is very important, but the client don't understand. Or they fail to see because they don't think that whatever the financial advisors feel is important to them. So there is a mismatch of expectations in that sense. Yeah. So clarity is very important for everyone.
Clarity of their situation and clarity of where they want to move towards.
Right. And also clarity of the context, because context really matters a lot. You can't compare cryptocurrency returns of 100% with endowment that is capital guaranteed. So that is the most straightforward way to say.
That is a topic that we can explore next time. That is an interesting topic. Okay, so without further ado, thanks for sharing, Jimmy and Ethan. I'm really inspired by the story that you guys have, and I believe that you guys are actually playing a very important role in the financial journey of a lot of people. Yep. So without further ado, we'll dive straight in. So the first question that I have today is how does the change in critical illness definition affect you? Okay, so this is a change that I actually announced last year, 2019. And as we are all aware, the LIA, Life Insurance Association of Singapore, revises this definition of critical illness every 3 years, three or 4 years, plus minus. So it is actually an update of it. So how does it affect us, and what do we need to know? Ethan, maybe you want to start off with what you
okay, for the I would say the impact of the changes, right? It depends on what you're looking at. So if you are a person with or possible issues with the definition, so for example, there was a change in the coverage for the lymphatic nodes. So if you previously you have felt that, oh, based on the definition, I should be covered, but when the definition changed, it seems that I'm not covered. So it becomes a contentious point. And LIA side actually clarified, saying that it's actually meant to make it more clear of what is covered and what is not. Yeah, but that is their clarification. But on actual claims experience, right, there are some who have actually claimed certain things, like for certain lymphatic illnesses, right? They managed to claim from one insurer, but with the change in definition, they definitely cannot claim already.
Oh, okay.
Yeah.
Okay.
So it really depends on what is your situation. So if it's like if you're a normal person, the LA's change should not affect you.
Okay.
Yeah, but if you have pre-existing condition on those, then you may potentially be adversely affected. Yeah, but that is also based on how the doctors write condition and also how the underwriters take your claim. So I can't say for 100% sure that you'll be affected, but based on legal definition, that is how it will be.
Okay, because it's interesting, like the LIA actually clarified, because for a period of time there were some agents who kind of they resorted to pressure selling, so they tell their customers or prospect, hey, you better change faster or sign a plan faster before the deadline, 26th of August. My LIA actually released a statement on the June 22nd, right? Say that there is actually no change to the intended scope of coverage. So in practice, what actually happened? Why is it that LIA is saying that, okay, there's no change in the intended scope of coverage, but the definition is supposed to make things clearer for all the vested parties, the customers, the insurer. But why is there a difference or ambiguity in terms of now, as you mentioned, in terms of claiming, some people cannot claim for certain kind of illnesses.
Okay, so it also, okay, the change in definition is also because of all these claims that arisen. If without all these claims, right, then LIO wouldn't have to change the definition.
Yes.
So you have to look at it in this way. So when they change is because insurers did not want or did not intend to cover certain conditions. I look at it in that way. But the old definition actually is ambiguous. So it becomes that, or it can actually claim. So that was not the intention. So when LI clarified that the intended scope of coverage did not change, they are right. I mean, if you look at it in that way, legal term, they are right. But if you look at the definition itself, as a trained lawyer, right, or you talk to any other lawyer, right, they will say that they can argue based on the definition.
Okay.
So that is why they want to reduce that kind of situation whereby clients may think that they are cheated. Yeah. So in that case, that's why I actually updated the definition.
Right.
Yeah. So whether the intended scope of coverage and the actual coverage, there is really a difference. That is why they actually changed it.
Yes.
So that's what happened.
Okay.
So I'm not trying to be pro for the insurer or pro for the consumers, but that is the situation.
Yeah, I guess many people need to understand clearly what is it, because it's a lot of medical terms. Even I myself, I was previously a pharmacist, so some of you guys know. I do understand some of these medical conditions, but some of them are actually very rare. Yeah, so the thing is that actually 90% of the claims, right, are just from the 5 major diseases, which is major cancer, as defined on the list, heart attack of specified severity, stroke with permanent neurological deficit. In layman's term, is permanent damage, stroke with lasting damage. Coronary artery bypass surgery, heart bypass, ED end stage kidney failure. So these are the 5 that actually make up 90% of the claims, which is what really practically affects people.
Yes.
So moving forward, right? Maybe I ask Jimmy, what is there to be concerned about with the new updated definition? Is there anything that we should be concerned about, or just as life as per normal? Jimmy?
In my personal view, because I personally have my own critical illness protection plan, and to my understanding, the recent change in critical illness definition is really not much of a difference as you mentioned. So with that, I'm not really worried that the change of definition will affect how I'm protected. Yeah. So yeah. So in my view, is nothing to be worried about. Yeah.
Life as per normal. So yes. Actually, if you have just tuned into this show, very good. This is good information for you. My personal thoughts on it is that we don't have to be too overly concerned. But of course, if you need clarification, do look for your advisor, or you can also talk to your physician, who may be able to explain clearly your condition or your medical condition. But from what I see of it, this one we don't have to be too concerned. And if that happens, you have unfortunately encountered any advisors that have used all these special tactics, just ignore them. Stay far away of them. Stay far away of them. Yep. So let me just move on to a second question. So second question will be, how can we respond to the increase in MediShield life premiums? So yeah, maybe Ethan, can start with you first. If you want to share some of your views.
Okay, I think for most of us, because it's something that's mandatory, so most of us will be like, just pay lor. I mean that there is nothing much you can do. Okay, but if you want to take one step further, it's just to understand, okay, since something become mandatory for me to pay, it's more of how can I finance it?
Yeah.
So the most straightforward way is put a bit more in your MediSave. Yeah, because anyway, money in the MediSave, you cannot use it.
Yeah.
So why not make full use of the interest and just use the interest to pay for it? So it becomes like recurring. You don't have to put in anything else once you make an initial amount into your MediSave. Yeah, so that is one way. The other way is if I'm one who really wants my money out from CPF, which I'm on the return my CPF camp, then you would be happier because I can finally use my MediSave more. Yeah. So to me, either way, it is a win.
Sounds logical. How about you, Jimmy? What's your take on this?
So to me, okay, what's the trend I'm seeing is because I personally have integrated shield plan from Aviva, let's say Aviva.
Okay.
And at that time, they do have this moratorium underwriting available. Meaning to say, I can take up this policy with certain preconditions.
Yep.
And then after I take up that policy, if I survive for the next 5 years, or I can't remember. Yeah, I think it's 5 years. I already went past 5 years already. So if I survive for the next 5 years, the policy, of course, will still be in force, and I pretty much have the the full protection benefits
Mm.
on the benefits of the policy. Yeah. So yeah, I'm glad that I managed to get that policy in force. And if I remember correctly, now that moratorium underwriting option is no longer available today. Yeah. So for the
So what other alternatives do people have if they were to come up with something to offset the increase in the premiums? And actually, by the way, just in case you're not aware, the increase won't take place immediately. You'll be you'll be staggered over a few years.
staggered.
So don't be too overly alarmed, but there should be some ways. So Jimmy, what would you suggest someone to counter this potential increase?
Well, personally,
Mm.
it really depends on the balancing act between the premiums that you can afford to pay and the various the plan A, plan B, plan C, the different type.
Yes.
Based on whatever plans that you can afford to sign up for. Yeah. So it really depends on yourself, how much you can pay. Yeah. And what's the kind of plan that you want to be covered for. Yeah. So if you are still unsure of this balancing act, it's still better to speak with your financial advisor to advise you on the best options for you.
Yeah, exactly. That's good. That's good advice. Actually, just to give a bit of context, why the big underlying problem in a way it's because medical costs are rising. Yeah, and the government it's quite concerned because of a few reasons. First of all, our population is aging, so the pool of funds that the government has to fund the medical expenses may not be sufficient. Yeah, as the years go by, more and more people get older, and then we don't have so many. Our birth rate is currently at 1.14, so it's way below the replacement rate. And of course, a lot of people be touchy about allowing foreign talent to come in to our shores. But that's aside. I mean, personally, I feel that we do need, the opinion that we do need to have these people coming in. Yeah, that's my own take, but that's another issue altogether. But people are concerned, and it's going to cause political points. If people if the policymakers try to push for more foreign talent coming. Yeah, and because of that, and because of the rising medical costs, and also the plans used to be they cover fully. Now one of the trend that we'll talk about in a little while is that it's all copay. You have to pay 5%. Yeah. So all these are some of the measures the government trying to take to keep the cost low. And of course, unfortunately, some medical professionals they are a bit more profit driven rather than cost driven. They are more profit driven. So they do over medical term what I call is they do over prescribe, they do over treat. So unfortunately, at the end of the day, who's bearing all the costs is us consumers. Yeah, which is why also actually I kind of expected that. To me, when I saw the news, I wasn't too shocked because I foresee if you look at the signs and symptoms, it's coming. It's just coming. It's like inflation. Yeah, so like unavoidable. So like Ethan and Jimmy have said, you do really need to look into budgeting a little bit more, allocating a bit more of your your finances, into your medical expenses and medical coverage. So this my take, it's my personal take. You guys got anything more to add on this? I just check if you guys, if friends, you have just logged on to my very first Happy Money series, and if you have questions, please feel free to type in the comment box. I need to toggle back and forth to Facebook to have a look.
There's one question.
Oh yeah, there's one question. Okay.
I share the question.
Yeah, sure.
Okay, so the question is there any critical illness policy that offers moratorium underwriting option available in the market today? Is there any?
Ethan, you have to take this question.
Okay, honestly speaking, there is no such thing as moratorium option. Okay, because for critical illness policies, right, it's different from health shield. So it depends on what you're looking at. If it's hospitalization, there's either cover with no further exclusion. That's the first option. Number two is cover with exclusion, which means whatever that you have earlier on, you will not cover for that plan, or they'll just reject the whole thing. That's the third scenario. Yeah. So for shield plans, this is what happened. For critical illness policy, right, it's either with loading or exclusion. So they seldom don't sell you. It's still money.
Yeah. Yeah. That's true.
Yeah. So how much more you need to pay depends on the underwriter and how they reinsure the risk. So that one is all on the insurer side already. I can't comment on that also. So but the most important thing is before you do anything, always speak with your financial advisor and ensure that you do not get quoted based on your current medical condition first, because once it's quoted, right, you must declare this to all the other insurers that if you are accepted or you are given the option to accept without exclusion or with exclusion. So that will actually create an issue in the future when you try to buy critical illness plan. Yeah, so if you can work with Yuan Tai, I think you will have contacts who can do a lot of all this. Yeah.
Yep. So in case you guys have just logged on and you guys are not aware, I have actually just recently joined the financial advisory industry. So if you have questions, you can reach out to me privately. I'll be able to help you out. Yep. So guys, any more to add on this topic? Now we shall move on to the last. Yep, sure. Jimmy, go ahead. Ethan, good to go. Okay. So the last query, the last topic that we'll address today is how does the merger of insurance companies affect me? I think you guys have actually covered in your show recently, so maybe just a little bit of a recap of some of the main points and how moving forward, right? How would mergers of different insurance companies and financial companies affect the man on the street? So, who would like to go first? Jimmy. Jimmy, go ahead.
Okay, me.
Yeah.
Okay. So, okay, as we have covered in our own Facebook Live series, okay, let me summarize. Okay, so as far as your existing insurance policies is concerned, those issued by Aviva or issued by Singlife, right? Whether is it before or after the merger, your insurance policies will remain in force. They will not self-terminate, all right? And whatever that is in the contract, in the policies will be honored, right? So as far as the man on the street is concerned, you should not worry too much. Probably the one thing that you want to take note of is when it comes to the policy owners protection scheme, right? because the coverage is based on a per insurer basis. Yeah. So in the event Singlife and Aviva merge, it will merge as one entity. Yeah. So when it comes to the policy owners protection scheme, right, the protection coverage will be based on that one new merged entity. Yeah. So that's one thing that you will take note of. Yeah. So that's all I can share. Ethan?
Okay, maybe I'll just add, sometimes, especially in this kind of scenario, if the company is not facing financial difficulties and it's actually selling a profitable business, right? In fact, consumers should be more than happy. Yeah, because if the other company can afford to buy over, right, that means they are very cash rich. So in fact, you should be more happy, and maybe the terms may even get better. Yeah.
It could be a strategic investments.
Correct. Especially for new policies that they may come up with, it may become more attractive, right, because they got a cash injection. They are able to sustain the business operations at even a premium above what they bought. So yeah, in fact, there's nothing to worry.
Yeah, true.
Okay, so what you guys are saying is that looking at the underlying reasons, in short, there's nothing to be worried, and in fact, there might be something to be positive about. So I think I will add on to this. So what will be some of the considerations in terms of buying policies when it comes to choosing companies? What are some of the factors that we might want to look at, or it doesn't really matter, that we just go purely based on what the policy is going to cover and what it's going to cost? Would that be a consideration, choosing the companies based on their reputation, market cap, all that?
Okay, if you are buying jumbo policies, which means like either your coverage is more than 1 million, or you are buying policies that has cash value of more than 200,000. Then that may be a concern, because the policy protection scheme will not cover more than 500,000 for coverage and 100,000 for cash value. Yeah, so it becomes like, oh, my insurance dropped lah, basically. My insurance of the insurer becomes lesser. Yeah, so that may become a factor to look at, okay, whether the company can survive any future financial considerations and how the business environment evolve. But other than that, honestly speaking, there should not be too much concern as to how much you or which insurer you go with, because generally all insurers in Singapore, especially in Singapore, they are all regulated by MAS.
And pretty tightly regulated as well. I think kudos to the MAS. They have done quite a good job in regulating the industry. I mean, I myself am not a sticker for regulations, but I really got to give them the mention for doing a very important job, because actually it also instills confidence from not just from overseas investors, but also for people, the men on the streets like you and I, to buy our policies and know that the insurance company won't disappear, or my policy will not be honored. I think we can rest assured that our policies will be honored and the company will still be around.
In fact, I think this has been reiterated quite a number of times already. Choose your advisor, not the company first.
Because choose the advisor.
If your advisor is good, he will have access to all the companies, even if he's not. He does not have the products from them, because he will build an alliance.
That's true. So that's another interesting concept. Yes, I agree with the logic behind it. So you choose your advisor. So that's the takeaway here, that this advisor will be able to put your interest first, rather than because it's always the bugbear, it's whether sometimes the interest of the advisor making a profit goes directly against the customer's interest for his or her financial planning. Yeah, then that's a fact. Yeah, just put it out there, lah. Just put it out there. Yeah. So I think it's very important that you really make a wise choice on choosing an advisor that you are comfortable with, that you trust, and that you know look out for your interests. Yeah. So Jimmy, anything to add on?
Oh, just to add on about because some financial advisors share with us that there's a mandate that all regulated insurance company must maintain a reserve ratio, some kind of reserve ratio such that they will always have funds on standby ready to make the payout when required. Yeah. So yeah, really is our current insurance companies are safe. Yeah.
Yeah, I think in this kind of climate, everybody is worried about what's going to happen next. And just put it out there. I think the next 1, 2, 3 years, or maybe even beyond, will be pretty tough, right? Because we know that Akong's bank account, piggy bank is quite large, but that is still finite. It's not infinite. So in fact, a lot of people are saying that the government will find ways to earn back for sure. For sure, the government has to do that. You have to balance the books. And the government cannot indefinitely give out the budget and give out handouts. Yeah. So the next few years will, in fact, be, let's just accept it. It will be tough. It will be difficult going. In fact, a lot of my friends, some of them have lost their jobs, some of them have closed down their business. Those who are still surviving are still surviving, just trying to get by, trying their very best. So, which is why, if you are on this show and also on Policy Works weekly, you guys have weekly, right? The show or regular shows, yeah. Please educate yourself. Please know about financial knowledge. Please know about saving, about protection, about growing your wealth. All these are very important things that you need to know. And take charge, take responsibility for your financial future. Yep. So, any last words before we close off the session? You check if there's any questions. Guys, if you have questions, maybe you can just ask. Just put it into the comment box, and we'll be happy to answer.
So far, no other questions.
Okay.
Yeah, no, not from my side.
All right. So it's been very enjoyable and very lighthearted, but I hope it's been a fruitful session for you guys. And the next session will be in 2 weeks' time. I'll have Ethan and Jimmy again. So if there's any particular topic that you want to hear us discuss on the show, please drop it in the comment box. If not, I wish you a very fruitful weekend ahead. The Happy Money series make you happy. Thank you, Jimmy. Thank you, Ethan. You guys are awesome. And just drop by their page as well to like their page and support their page. Lots of awesome content. They have a website as well. What's the website URL?
It's www.policywork.com. You can also find us on Facebook, YouTube, and Telegram channel. Yeah, you just search for the word Policy Work. I can see on my bottom right corner. Yeah.
Policy Work without the space. Join together.
It's one word.
One word. All right, guys. Okay, thank you. This is Happy Coach with Ethan and Jimmy from Policy Work. Thank you, guys. Have an awesome weekend. Bye.
Thanks, bye. I need to end this stream.